We move on and let's get your financial portfolio queries answered, because the very purpose of having an investment portfolio is to actually figure out a financial goal for yourself and do an investment according to which is aligned to that particular financial goal, being buying your first house, or maybe even strategizing your retirement, your first car, or maybe even a phone that you want to buy. Anything and everything can be planned, and for that you need an investment strategy. For this, I have Shweta Jain from Investography today, and you can actually send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Shweta, good evening and welcome to the show. I have first question from Bhaskar. He's written this question from Hyderabad, I guess. Yeah. And he says that he's a retired person and he has 20 lakhs with him right now. He wants to invest for maybe 2 to 3 months, a very short period. And he wants you to advise the right investment option for this.
Hi, Kavita. Thank you for having me on the show. So for 2 to 3 months, I would recommend a short-term bond fund for Mr. Bhaskar, a couple of them. Bandhan Short-Term Bond Fund is a good fund that he can do. DSP Low Duration Fund is something else that he can do. And he can add on if he wants a third fund to the mix, because it's a good thing to have 2 to 3 funds. He can also do Kotak Bond Fund short-term.
I have Bhaskar online with me. Bhaskar, hi, good evening. Thank you so much for sending us your query. And Shweta just recommended a few investment avenues where you can park your money, because the time period is only 2 to 3 months. So we cannot recommend you an equity strategy. It has to be a debt-oriented strategy where you don't have any risk per se related to that. Anything else you want to ask Shweta?
Madam, actually, I am a retired person. Yes, sure. I have just the amount with me. So I have to pay it after 2 months. So
Got it. So Shweta just recommended you. Right. So she just recommended you a short-term bond fund and also a liquid fund. If in case you have missed the names, you can maybe watch the show again on our YouTube and note the fund's names down from there. We move on, and do I have Mr. Rajesh Kannan? Okay, I don't have him on the phone line, but Shweta, let's take his question. He has a surplus of 10 lakhs and he wants to understand where he can park this money. Now, I don't have a lot of clarity, but then he's clear about having a liquid or maybe an ultra short and arbitrage as an option of investment. So, yeah, we don't know his risk profile, but what would be your recommendation?
So ideally, when I don't know complete details, I err on the side of caution.
Sure.
So an ultra short bond fund, so the funds could be Kotak Low Duration Fund, could be Kotak Short-Term Bond Fund, or a Bandhan Short-Term Bond Fund. These are funds that have good credit quality, are good short-term funds to have. If he would like to do arbitrage funds, I would see a bare minimum of at least 4 to 5 months, because you do want to see some strategies play out in arbitrage funds. So 4 to 6 months is a great time for you to have. If you're giving arbitrage funds a chance, then he could look at a Mirae arbitrage fund. He could look at Invesco arbitrage fund. So he can see some of these arbitrage funds if his time horizon is more than 4 months.
All right. If the time horizon is more than 4 months, maybe you can look at these investment options. And over here, the purpose is just to keep your invested or your capital amount safe, right? We are not talking about earning anything on, but that's not the priority is what I'm trying to ask you.
Yeah.
Okay. All right, we move on, and we'll take the next question from Naman, and this question is also via an email. So the total mutual fund portfolio that he has is of 1.14 crores, and he's invested 35 lakhs through direct plans, monthly SIP of 50,000 per month going on. And we don't have the name of these funds, but he wants to understand if the market is at records high and if the market corrects from here now, will he get an average NAV if he's invested in direct plans through SIP? Can he book profits on his regular plans?
So I think Naman has a great question because a lot
Right.
of investors do struggle with this combination of regular and direct, because some schemes may be regular, some schemes may be direct, and they may want to switch everything to a direct portfolio. So yes, when you're looking at market highs, you can exit and enter, but the downside is that you're going to pay a lot of tax. But you're not really using those profits, you're just investing that back. So think about it smartly. Don't time the market. The other thing that happens is people are then looking at timing the market and saying, okay, now I'm exited at highs. So if I've exited, how can I enter at these highs again? Right? So unless they're doing an STP in the next 3-4 months and starting off immediately, I don't think it's a great idea for you to book profits now and then try and time the market. I would actually advise you that you stagger these exits from your regular mutual funds financially or wise, to see how much you can take advantage of the capital gains, because I'm assuming some are debt and some are equity. So when 3 years complete for debt, for example, and when equity crosses a year and you have 1 lakh gain that you can take advantage of at least. So I would rather take that position and make sure that you're not paying any exit loads in these, if you build these over time especially. So make sure you're taking care of a few of these factors and then moving. I don't think you need to be in a rush to realign your portfolio just because markets are at the highs, because you're anyway going to invest in equity again.
So that's the answer for Naman. We move on and we'll take Ashish's question. He says he's a retirement government officer and he wants to invest 2,000 rupees per month for his pension. He's 67 years old and he wants to understand the kind of funds you might want to recommend. We don't have him on the phone line, otherwise I wanted to understand how, what would be the purpose of this investment. Anyways, the kind of information we have is very limited, Shweta. So what would you recommend?
So I think this is his pension money, which is excess. So he may want to first set aside some extra sort of money in the liquid fund or short-term bond fund even, so that if there's an emergency, that can be used for that. If he does have a surplus fund which can be used for emergency, at least a year's expenses, I would say. If he does have that kind of money set aside, which is accessible, which is liquid, then I would say that he could look at a balanced advantage fund. I don't want to recommend equities because he's 67. I don't know if he has previous equity exposure. I'm assuming not. Then if in that case, I really don't want to give him stress. So a balanced advantage is something that I think I can recommend to him for at least if he has a horizon of 3 to 5 years and is looking to grow. And I think 1 year, if he invests, he can see how it's going and then sort of see if that suits him. So like a ICICI balanced advantage or if HDFC balanced advantage is something that I would recommend to him. So one, not both, just one of them.
Apart from that, any other completely debt-oriented category if he might want to invest in?
I would say then he could look at short-term bond funds. I don't want him to do too much long-term debt at the moment. So I would say then look at Bandhan short-term bond fund or Kotak short-term bond fund, depending on which fund houses he prefers. If he does, then one of these could be somewhere where he can start off.
Question from Manoj. Which hybrid fund is good? Moderate risk one or the one where you get... okay, so the criteria is moderate risk and high returns, and he wants a specific hybrid category for this.
Okay, so risk and return do go hand in hand. So if moderate risk is something that you're looking for, I think you should look at moderate returns. I think expectation management is key here, because otherwise you're always going to be unhappy with the scheme and you will want to keep switching sooner rather than later. So I would say something like a Kotak hybrid fund is something that he can start looking at. If he's looking at a higher side of equity, if he still wants higher risk, not moderate risk, then he could look at a balanced advantage fund, like an ICICI balanced advantage fund. But he has to be aware that the risk is higher there because he is emphasizing on returns. I don't want to recommend hybrid funds which have lower equity in them, because then he might not be happy with the returns. So I think these schemes, whether it's a Kotak hybrid fund or a ICICI balanced advantage fund, these are schemes that he can look at and maybe dip his feet into it first, maybe invest a little bit and see how it is and how he likes the experience. And then 6 months later, a year later is when he can increase his investments.
All right, that will be all for today. Thank you so much, Shweta, for being on the show and helping our viewers with their financial portfolio queries. And time to say goodbye on the Money Show, but I'm going to leave you with our WhatsApp number, which is 865-797-4571. You can also email us your queries on the Money Show at etnow.tv. Thank you so much for watching. Goodbye.